Hello family, in this video I'm going to explain to you a trade breakdown in gold. It was last month, so let's get into the chart. So basically in this breakdown I'm going to tell you the thing that I'm using as confirmation for my entry, and also I'm going to give you my step by step process and the way that I'm thinking, like from the time frames, from the execution, and what session you should trade and what session you should avoid, and everything you need. It will be fixed in this video. So let's get into the chart. So I was looking at gold. The market was pretty bullish. So the market, what it did, it just come and create lower low there, and then take out that low right there as manipulation, and then went higher, breaking the structure, but it didn't take all-time high. So for my idea, I was looking to that low to be taken. Okay, when the market was there, I was pretty bearish when it starts coming like that, to be honest with you. And then like it was like 20 days of bearishness, and then it stopped after taking that low. So and then the market aggressively went again higher, but it didn't take out the high, then come back again. As soon as the market come back to that low, sweep the liquidity and then offer me a fair value gap right there, and that fair value gap starts being respected there. For me, I am not using a fair value gaps like an away, for example, for the people that they don't understand fair value gap. Let me just understand, make you very like that. Like that, there is 3 consecutive candles like that, and that wick over there, it's not touched by that one, so which means this body right there isn't touched. Okay, so the market one day, maybe the next day, maybe after 2 days, it come to balance that and then it run higher, and this is what most of people are looking for. And in the bearish side, you just need to make this thing the opposite way. So the market offer me that fair value gap, and I am not like going to press the bottom like that. No, this is wrong, because why I didn't press the bottom to sell there, and why I didn't sell there, it's nonsense. Some fair value gaps are not true attention. Okay, the market maker just create them just to induce you. For example, this one, yeah, you press a buy, you will be smoked. So for me, the way that I am choosing the fair value gaps, I need manipulation first of all, and then displacement higher, creating that fair value gap. Okay, and that fair value gap is just a byproduct for my attention. My attention is I need the market to create that fair value gap and then come to it. This is the fair value gap right there, and then the market come to it and fail to create new high, which mean I know 100% some people they getting into that fair value gap, just trust that setup, and then the market makers they need to smoke them out. Okay, so I know 100% this low has a sell side liquidity, because the market, it's not every low and high has liquidity. Yes, for some kind of reason, yes, but it's low. For example, if you tell me when the market was creating that candle without a fair value gap there, with just down close candle, it's not like $100 million here liquidity, just for measurement. Okay, and then after the day that create that fair value gap, it will not be 100 million, it will be more than that, it will be maybe 600 million. So it will be more reasonable to go higher. So this is what I am counting for. I am counting for that law to induce people. This is what the way that I am like detecting the inducements. I need a fair value gap. I need people to trust that, and then they get into the market in that leg, offer them some kind of market structure wherever, and then we will go deeply into that leg to understand what I'm talking about. And then the market take them all out, and then break of structure right there or there, and then I'm looking for buys. This is the setup that I am using. So let's get into the chart there. As you see, the fair value gap there, it's in the daily time frame, which means I will wait for inducement to be what? In the daily time frame. I will not rush for 1 minute, 2 minute, 5 minute market structure there. No, I know there will be people, they will see that fair value gap in the daily, and they will wait for that candle in the daily to print bullish, and then they will start press the button buy there, and then they will have their stops there, and yeah, the market maker will come, check them all out, and then go to the opposite direction. So that's what this is my plan. I wait for the market to come into that fair value gap. Now I detect my inducement. This is inducement. Let's just put it like that, bigger, like that. No, I don't like that one. Yeah, that one is more clear. So this is the inducement. So now let's go to just 4 hour to make sure you understand me. For you here, when the market it come here, you will start looking for, oh, the market maker buy model, market structure shift, oh, it offer me fair value gap in 4 hour, oh, we go to the moon. You start buying, there, you start buying that order block, that fair value gap, you start trusting that the market it will run to that equal highs, and then like sadly the market went lower because you don't have a clear like time frames alignment. You need to have that. So your idea, your fair value gap in the daily, you must wait for that inducement to be in the daily. It's 2 days there printing 2 candles, and then the third day they start coming to take you out. Now there is some kind of other people, they will see this is an equal low, and then the market went lower, manipulate, offer them a fair value gap, they will start buying, and then the market went more lower. Why is that? I'm going to explain to you why. Because here I am not talking to you from something that I don't understand. I understand everything happening here, but you just need to give me your mind. Now the market, our inducement and our setup, where it happened in the daily. You must wait for the market structure to happen in the daily, which means that inducement being taken out there is no market structure there. Where is the market structure? We must close above that high. No, we didn't. And that one, the next day also, after we sweep that one, we didn't close above that. It's just a wick. And then the third day, we didn't close above that. And then the fourth day, after taking all of this liquidity right there, it's all being like 5 days of smoking people in the wrong positions. And then the market maker, as you see here, the break of structure right there. This is your golden ticket. And then you will use this order block. Now this is a real order block. For some of you, like every down close candle is order block because you don't know what you are doing. This is the order block. But that one is not, that one is not, that one is not, that one is not. None of this is order block. Only this one. And then the market. Let me now, after the market close above that, and then you will go for lower time frame, like 4 hours. You don't go for 5 minutes, no, you will go more lower than the daily time frame. So what we have here, we will have the same stupidity again happening, same setup. You need to wait for people to get into the market. If you want more ratio, or if you want just like to you don't have time or whatever, you can just use that fair value gap to buy, and that's all the block. And yeah, the market smoke higher, And basically I didn't catch that one, but let me tell you what you need to do here. So after the market taking all of this liquidity, look how many time it took liquidity, but it's not real until that we get that market structure shift. This is a real market structure shift, which means now this is our pool of liquidity being smoked. Now we want to go higher. So the market makers, they need to create this illusion that they create in the daily time frame, they need to create it in lower time frame. Okay, because they want to make sure that everyone that is trying to chase them there, they will be smoked too. So after people they will see this displacement in 4 hours, what they will do, they will say, okay, I'm going for that fair value gap, and then yeah, they got smoked and then the market run higher. So what you need to do here is basically you have two options. If this thing is in the higher time frame, like in the daily for example, you will use this order block for entry, and then your stop loss should be below that. But if you want more ratio, you need to pay attention with me. You will wait for that exact setup that's happening in daily, which means fair value gap, tapping into that and failing to create new high. This is the fair value gap, failing to create new high, and then this is sell side being generated, and then boom, check them all out and then run higher. So you need to get into the market when the market already took liquidity. So your idea will be formed around of this price level. So according to that, what we have here, we have fair value gap 4 hour, which means what? You should wait for what? For our inducement, which means this one. Tapping into that fair value gap and then start running higher and failing to create new high. This is it. And then that sell side being generated below that low, the market smoked that. Okay, in that wick over there. And then in the New York session, and yeah, I don't like to trade gold in London session. I am always in New York session. And the New York session there, you should start buying. You don't wait for that market structure shift again in the next time. You should only wait for it in the first time. In the second time, you should not wait for it. But in this trade there, I didn't take it. It just like the way it is. I didn't like it because it was Friday, so I don't want to stuck in the market in Friday. I hate Friday, like to hold trade, especially in gold during the weekend. So I know the market maybe can run higher, but it will not go far away because it's Friday, low liquidity, you know that. So I avoid that. I wait again for this exact setup. The same thing. Please guys, you need to understand. The market always doing it every single day. And then what you have here for our fair value gap, you see how big it is? And then people, when the market come there, look, it come there. And then people start buying. So this is what? Sell side being generated, and that low fail to create new high. Which means all my rules now confirm that this law has billions of dollars on sell side. So what I will wait for the market to go below that, to sweep that. So the next thing is I'm asking myself, this fair value gap is 4 hour? Yes. Which means I will wait for 4 hour candle to close above that, which means I need to get 4 hour break of structure. I am not going to choose 1 minute break of structure. Forget about this stupidity. Please guys, understand me. Now you are like you are playing with algorithm, and that algorithm he has not understand what is the difference between 1 minute and 5 minutes. No idea at all. And because he's not programmed like this way, he's only programmed to run a specific levels and then go to the opposite way. So you tell me 5 minutes break of structure, why not 5 minutes and a half? No. If that fair value gap is 4 hour, which means the algorithm is only looking for 4 hour evidence to take the trade. So the thing is, they already did. and then they give me that market structure shift right there. And then I wait for the market to come there, and then I enter in that order block. So this was the trade until I take a partial there, and then another partial there because it's support resistance. So yeah, that was at all another partial there. So yeah, this is all it is. And let me do a quick recap about that. So what you need to pay attention, guys, is you have three rules to confirm your idea. The first rule is I need the market to offer you a fair value gap. It doesn't matter daily, weekly, monthly, 1 hour, it doesn't matter. You need only to have that fair value gap. So I am like to go from higher time frame. If I have it in monthly, I will stick for the monthly. So you don't want to stuck in that monthly actually there and then wait for maybe like 3 weeks or so to make a trade. No, you should just like look for a daily candle or something like that. So my things, I'm looking for the higher time frame to the lower time frame, but it's depend. If we have high impact news, this high impact news will more likely like related to higher time frame, daily time frame, weekly time frame, monthly time frame. So if we have again small powerful news, yeah, this is will be more than that, 4 hour maybe, like that one. Okay, because this is small news, but that one, it was big news, and that one related to what? To daily time frame, because this is injection of orders in the daily time frame. The news is scam. The news that they are sharing in Forex Factory is just a scam to scam people. When all people sold there, and why the market didn't go lower, they said you because news, and you will keep depositing more money and hope for the best. So anyway, this is not our subject. The subject is you need to wait for that fair value gap. Now you have your fair value gap there. Let me do that. You have your fair value gap there. Okay, boom. I like that one. And then what you have to do is to wait for the market to come into it. 50% quarter, I don't have any idea about that. You just need to wait for the market to come to it, but more likely I like to come near from the 50%. This is my thinking. I don't like to come like that exactly and then run, because yeah, I just don't like it. I like 50% like that, 0.25% of the upper quarter. Anyway, let's keep it this way. And then the market run higher with creating some kind of small time frame fair value gaps there, and then fail to go higher than that, like that. Perfect. Now the market, why actually didn't go higher? Why it just tap into that and then run a little bit higher and then stop? Why is that? The logic behind it is people now they believe that the market will respect that fair value gap and then they will start chasing to buy. This is the problem, because everyone out there, they have the same idea. They think he is smart, and then the market do its thing right there. Now we have the sell side being generated. A lot of people now they will start putting their money below that low. So you will wait for the market to consolidate a little bit, because it will take some time to go lower, and then go lower, scare out all of these guys, and then it come back. What you need to pay attention to is you need to ask yourself a question. What is the time frame of that fair value gap? Let's say your answer is one daily candle. Okay, you must this liquidity grab right there broke a daily high and close above it. Okay, if it didn't, and then you start buying again, this is the only inducement. Now the market induce more buyers, tap them out, and then run high. So you should follow these rules by definition. Don't add stuff from your mind trying to be the smartest guy. No, just follow what I said. If this leg and that fair value gap in the daily time frame, you must wait for the daily time frame market structure. Follow this with description like a robot. Don't try to understand. Don't try even to think and to add from your mind, and you will say, oh, the market will skyrocket and lift me. No, it didn't. Look how many days it's stuck there. Look how many days. Look how many opportunity there. There also. There is so many opportunity. There is also opportunity there. You just need to understand what you are doing. So you don't care about that. The market will lift you or not. Because the market it's not a train and no one have the ticket anyway. So you must do what you're supposed to do, not what you think you wanna do. Okay, so this is easy. And after the market taking that low, and then give you a market structure in the daily time frame, and now you will move to the second part, which means the execution, like this one. What you should wait for, either if it's daily time frame, you should wait for that fair value gap for hour to enter a buy without waiting for that extra saucer right there. You can wait for it for more ratio, you can just buy there. My favorite time to buy is between like 9:30 to 11 o'clock. Okay, and this that candle exactly like that. So so this is great time to buy. And also, if you miss that one, if you miss that candle right there, you should wait for the next day like this one. That one. This is where I execute most of the time my orders between 10 and 11 in New York time. So the point is, if you want to wait for more ratio the market, you should wait it in to come, induce again a lower time frame, fail to create new high, and then went lower, and then market structure shift, and then you enter there targeting. Now you can target to the moon as people talking about. So but this it will be just in lower time frame. I'm just giving you now the idea, but for you, you need to go and study this example in gold, and study this area right there, and study this one also, and study this one. There is trade happening there, and also you will study this fair value gap there, that one, and also you will study that one, and you also need to study that fair value gap. So you should go and try and test this thing and see how many the market offer you an entry. You will find maybe like 5 trade or so when the market start running higher. And also it was offering a sell setup there. If we go to daily time frame, as you see, look, fair value gap in the daily, come test, come down, but it didn't take the low, and then the next day sweep that. And the fair value gap is in daily, which means we go to market structure there in the daily. Look, we got it right there. Perfect. Just I don't want to confuse you with so many line. And then you should go for 4 hour, and here is where the go to market structure shift, which means this retest there is your entry. There, as you see, the market smoke lower. That's why there it was bad time to buy and was good time to sell, but I didn't care about the sale because this one, it was more convinced that one. It was only great sale from this to this. More than that, it's just a noise for me. But I didn't take it because I was not in the chart of gold. I was somewhere in the world enjoying the life. So I was not at the chart at that moment at all. I was in vacation. And then I come around these price levels. If you enjoyed the video, and also the next video will be more deeply, more examples about that, you should follow me and subscribe to my channel if you care about more of this concept, inducement, and this one, because anything in this life is inducement. So you need to understand that, and you need also to make sure you get the point, because no one really know what he is doing, because the market, like the market makers, they are really care about your stop loss. Okay, when if the market run from this to this, they are not really care about your stop loss. And 100 people million like you, they don't care about that, they care about another stuff, and the stuff you cannot understand. And as you see here, if we just go to daily time frame, and we see the gold overall is pretty bullish, like it's always happening. Look, this is a fair value gap in weekly, induce people, check them all out. We got the market structure in weekly, so overall we are still bullish to take at least that high. From here you already know that order block there is gonna hold, because it did the job that you wanted to do, induce people there with fair value gap and order block, take them all out. So, and that pump there, it's market structure shifts and offered so many fair value gap there to high, and then they smoke you out. So yeah, it's always happening, it's everywhere in the chart. And yeah, now I'm just giving you now the some stuff. Like if you really look at the chart, fair value gap there, induce people, take them all out, and then the market smoke higher. Yeah, it's everywhere, you cannot dismiss that. And now the gold, it's near from all-time high. I don't like if it come back. If it come back, we will run that low. So yeah, I don't like that. We should break through. If we are very bullish, we should break through and run more higher. If we come back to the range, this is bad sign. We'll more likely run to that low and that equal lows there. So yeah, and more likely that equal lows too. And to balance, it will go in below until it will find a higher time frame fair value gap, monthly, maybe 3 months. I don't know, I don't do that bigger time frame analysis, by the way. I'm only stick for daily, weekly. The only fair value gap that I'm using daily, weekly. More than that, it just giving me like how powerful is the trend is. If the market is moving higher and decrease and higher time frame fair value gaps, I'm a little bit like more dismiss the idea to sell. I'm only focusing on buys. So yeah, this is like easy. Like now the market is going higher, bullish fair value gaps, breakaway, another bullish fair value. Now it's pretty bullish. There is nothing like calling for sell until we come back to the range. This is really bad. If we come back to the range, the market will smoke, because a lot of smart money getting in that leg. If the market come back, yeah, just yeah, which means this is just stop hunting, and yeah, the market will more likely to go down. So if you like the video, guys, in the next video I'm going to talk also about order block. How can you use order block as this inducement strategy? And make sure you like the video, and then you put a question. Anything that you don't understand, you put a question below in my video, and then I'm going to answer in the next video. Or if it's just clear question as it is and easy to understand, I'm going to answer that in description and in comment below. So it doesn't really matter, but it's depend of the question. So go ahead, guys, and also answering the question that I'm going to ask you below. I'm going to ask you a simple question. You need to answer me to make sure that you understand the whole stuff there.